Welcome back to ToroAlerts. I'm Josh Kincaid, co-founder, capital markets analyst, and Jason Lammers is with us, chief technical analyst with ToroAlerts, to talk about ChatGPT and what sectors are going to do well in the stock market. Jason, thanks for being back with us.
Thanks for having me, Josh.
Yeah, so we're going to look at a couple of things. So ChatGPT said that it's difficult to predict with certainty what sectors are going to perform well in the stock market in 2023. However, there are some that are likely to be in demand in the coming year, including technology. The technology sector being companies involved in software development, cloud computing, artificial intelligence. They're expected to continue to grow as the world becomes increasingly digital. Are we yay or nay on that, Jason? You agree with ChatGPT? Get you to share your screen and then dive right into it.
Yeah, so let me go ahead and share the screen here. So can we see my chart now?
Looks beautiful.
Okay. So ChatGPT called out a couple of different sectors specifically that it thought would do well this year. The first one was consumer goods, and so I pulled up the Consumer Discretionary Fund ETF, the XLY, just to kind of take a look at it on the chart. And we can see that we've got a pretty clear downtrend on consumer goods or consumer discretionary right now, but we are up against that 200-day moving average and that descending wedge. So it looks like it's potentially poised to break out, although it could potentially just reverse right down to the downside tomorrow. So we're at a big inflection point on that one. If we do see that breakout and we get through the Fed meeting tomorrow without any major disruptions, then I think there's definitely going to be some tradable opportunities in that sector. But I also think later in the year, there's a strong possibility that sector will get beat up pretty bad as well, because I do think there's some pain ahead in the markets. But at least in the short term, I think the ChatGPT is correct on consumer goods, at least in the short term. And then if we take a look at their other one, they talked about infrastructure. So for infrastructure, I took a look at the IFRA, which is our iShares US Infrastructure ETF, which is quite convenient for that sector to use. So we can kind of see when we take a look at that one. We did have the infrastructure bill passed by Congress last year or two, and so that should help support that sector kind of on a fundamental level. But when we dive into the charts, we can kind of see that it had a really big rally off those COVID lows and just shot up. We were, sitting at 20 something a share when the COVID crash happened, and we've just about doubled off that rally. But since mid-May of 2021, we've just kind of been real choppy and sideways. So I'd want to see a breakout above that 39.50 level to get really bullish. And I think if we do see it break above that 39.50, then there's the next leg higher likely in play. And if we do get that, I think again it'll likely be in the earlier part of the year.
And just to be clear, those are companies that are involved in transportation, water, waste management. ChatGPT was expecting those to be in demand as governments investing in upgrading infrastructure, buildings and bridges and everything kind of collapsing. So does that kind of hold true with that portfolio as well?
Yeah, I think that this infrastructure ETF is. When they did pass that infrastructure bill, this ETF performed pretty nicely on that news. But it's kind of like, as we've seen since about middle of 21, it's kind of stalled out and been chopping around between 32 and 39, and so and most of that price action is even tighter, sitting about 35 to 40. So a clear break above that 39.50 level, I think, could be a really good reason to start going long on some infrastructure, either individual stocks or just go long the ETF. So I think there is a possible setup developing for that to materialize.
Interesting.
Price action early in the year. And then the other sector they were talking about was clean energy. So this is actually a sector stock that I've traded quite a bit, iClean, ticker ICLN. And if we zoom out on this one, you can see that it just had a monster move off of COVID. I traded this off the COVID lows and did quite well with that one, kind of trade those swings all the way up. COVID low bottom, we were $8 a share. We peaked out at 35, so just a monster move out of that. We've then since declined and sold off, but it looks like it's putting a bottom in here. And so if we do see that break out of this descending wedge, then I'm definitely going to be going long on the iClean ETF and probably some of the stocks within that ETF. So it does look poised to potentially break out, but I want to see it break that descending wedge before I get too excited about it.
Looks like a lot of contagion or sideways movement, but ChatGPT said that renewable energy, with increasing concerns about climate change, the renewable energy sector, including companies involved in solar, wind, hydroelectric power, are expected to see some growth. Looks like sideways movement there, but maybe it could break out.
Yeah, I think as soon as we see a clear break off this trend line, I think and especially if we've got a the market's overall supporting a move to the upside, as long as the markets aren't falling apart broadly, then I think there'll be some definite tradable opportunities in this sector once we see a breakout out of this descending wedge.
Okay. Well, we're halfway there. We got 3 more sectors to go. What do we got next?
Yeah, so they were talking about e-commerce for ChatGPT, and so we took a look at the iBuy ETF, and so that's a internet retail ETF. And if we zoom out on this one, we can see it's only been around since about 2016. It IPO'd right around 20 or so a share. Had a pretty strong move up all the way into 2021, and then we can see it's had a really steep decline, kind of back down. When we really zoom out, this red line indicates where there's the most volume price on the price action there. So there's a really strong floor right around that 45, 46 level. So arguably, if we're above that, you could trade that long. We did have a really steep descending trend line that we broke not too long ago, but then it actually dropped a little bit lower. So a break above 55 would be really bullish, but I think you could potentially trade this one if we saw some price action get up above 50 or so. And I think there is a chance that if we do see the markets do well in the early part of this year, that we'll likely see that iBuy ETF head higher as well.
Be interesting to see long term, in a little ways, a year down the road, if that's a COVID effect, that bubble that kind of went up and came back down. But the reason for ChatGPT to bring up e-commerce is they believe it's expected to continue to grow as more consumers are turning to online shopping in light of the COVID.
Yeah, and so the other sector that ChatGPT suggested was healthcare, and I think I probably know what the logic is on that. There's a lot of kind of fundamental analysis that think healthcare is really going to have a big bounce back during COVID. A ton of surgeries and a lot of elective type of things that is where they make a lot of their money got either delayed or canceled, and so there's a backlog of demand for elective surgeries and things like that. And
Aging population.
Yeah, so I think there's a strong narrative that supports that idea. However, when we look at the chart of the XLV, which is our healthcare ETF, we can kind of see that it's been pretty choppy and sideways. It peaked out in August of 2021. When we zoom out a little further, we can see off the COVID lows it had a big move up. We bottomed out at around $77, $80 or so on the XLV. Peaked out about 137, and then we've kind of been just chopping around sideways. And we kind of have this, what looks to me like a potential topping pattern. A lot of times you can get these topping patterns where you kind of have these arcs. And so it's either, at least I would say it's at least just sideways price action right now and maybe just consolidating before a breakout, or this might potentially be a topping pattern, which would suggest it's going to break down lower. So right now, at least on a technical basis, I'm not a huge fan of healthcare for that sector. At the moment, we do have that huge volume support right around 132. So if you did see it above that 132, 133 level, you could take a speculative long on that and see if we do ultimately get a breakout. But I'd really want to see a resolution out of kind of this big consolidation that's been going on since really middle of 2021 and see a definitive breakout one way or the other. Now, a sector within healthcare that I really like, we'll take a look at that chart. Something I would be much more excited about is IBB, which is the biotech sector, which is still healthcare, but kind of a subsector within healthcare. We take a look at IBB. We got this inverse head and shoulders set up. We got our neckline sitting at about 135 or so. We were actually just got back up above that neckline today on today's close, recording this on the 31st of January. So as long as we're above 135 on IBB, I actually like the opportunity for a breakout in biotech, especially if we get through the Fed meetings and the jobs report doesn't bring the market down. I think there's a real strong chance biotech could be poised for a breakout. And if we see that get above about 138 or so, I think we definitely have a breakout to the upside on that. And I think there's a lot of room to run. You could potentially see we can actually do a measured move off that inverse head and shoulders, which would represent at least 30 points up off of the IBB. And so if we take 30 points up there, we can see that puts us right up to that trend line, which is about 165. So potentially like a 22, 25% type upside move on the sector. And so if the sector is going up 20, 25%, there's going to be some stocks within that sector that are going to do even better. So that's definitely a sector I'm keeping a close eye on in healthcare.
I think that leaves us with consumer goods. Those are companies, food. What's that?
Did we do consumer goods? Yep.
Oh,
that was it. Yep. Then technology was the last one, the XLK.
Okay. Let's do that then.
So yes. So XLK was a technology fund that ChatGPT thought would do well. We can see on this that obviously off the COVID lows, we saw a monster rocket move out of the technology sector. And really, if you go back really since the bottom of the great financial crisis, other than those blips with the markets falling apart, tech's been the place to be. Growth. There's some traders and investors that have only been doing this for a few years that's all they traded as growth, because up until recently it always won. It was a great sector to be in. But as we can see recently, starting in the end of 2021, early 2022, tech got really beat up. It's been in a nice descending channel here. However, we did just break that channel just today, and a couple days ago as well. So there's been a couple of attempts to kind of pop out of this downward trending price action. So if we can see that hold and stay above that trend line, then that could suggest that we might potentially see a breakout in technology. And I think if we do get an earlier rally in 2023, then I think there's a good chance technology will run with that. I actually have a chart here that shows growth versus value. And so this is showing growth performance versus value performance across all the entire market. And anytime we've seen the rallies happen during a bear market, there's always been a nice bounce in growth. And so we're seeing that right now as we speak. So these are weekly candlesticks. We've had about a month where growth has started to outperform. And so that's kind of been a cheat code to tell me during these bear market cycles, if we see a growth breakout, that's tended to support the best upside rallies in the S&P 500. So I think there's a strong possibility technology will do well, but again, early. I still think there's going to be some pretty bad pain later on in the year that'll probably beat up just about every sector.
Well, let's talk about that, because we just wrapped up the 6 sectors that ChatGPT thought would do well. That included technology, healthcare, e-commerce, renewable energy, infrastructure, and consumer goods. And so some of those are going to be good, and some of them are going to maybe move sideways. We don't know. We'll find out. But based on what you've been doing and looking at some of the technical analysis, Jason, where do you believe that market's going to move, or what sectors, I guess, are you looking at in 2023 that are bullish in your opinion, or even bearish if you want to bet against it?
Yeah, so I think that we're potentially setting up for an opportunity for a bullish opportunity to trade to the long side in the early part of this year. If we take a look at the S&P 500, in fact, let's just go to my SPX chart. I've got my Elliott wave set up for that. And so if we start off with an Elliott wave pattern from the COVID lows here, we've got what seems to me a pretty clear wave 1 up, a wave 2 correction, then this wave 3 to the upside, which was where we peaked in late 2021, early 2022. This looks to me like 2022 was essentially a wave 4 correction. And if that is correct, then we would have one more wave to the upside before this kind of pattern completes itself. And so that's just kind of Fibonacci math that we can do to kind of come up with some projections. And so as long as this holds, it looks like there's a decent chance that we potentially might double top and get back to the all-time highs in the S&P 500, or maybe even overshoot it a little bit. Based on the LA wave map, it would suggest we might even get as high as 5,000 on the SPX. I think if that happens, that would shock a lot of people. A lot of people are positioned bearish going into the start of the year. But one thing I've learned is when the whole market's positioned one way, it tends to do the opposite. And so I think because we've had so much bearish sentiment to end 2022, I think that even just supports the narrative of potential breakout, and we are breaking out of this down channel trend line. So that's one potential narrative, is that we could see this rally up into at least a double top, or potentially even as high as 5,000 or so on the S&P 500. On the opposite side of that, there's also a bearish scenario. We can actually take a look at 2022 and look at the price action to the downside, and we can actually show that this looks potentially like it could be a wave 1 down, wave 2 up. If that's the case, that puts our wave 3 all the way down here at 241 on the SPY. So that's a very bearish case, but that's also using some Elliott wave analysis to potentially project a bottom. We'd then likely get a wave 4 rally to the upside, and then a further drop that potentially could suggest as deep as almost like 200 or so on the SPY. So that would be a huge correction. That would probably be about 50% down from here. But if we do see this rally and the Fed doesn't beat the markets up for the job report coming up this week, then as long as if we do get above about 430 on the SPY, I think that would kind of nullify that Elliott wave count. So if we see the SPY rally above that 430 level, then I think that would negate the bear case, at least for now, and it would support that the idea that we'd potentially double top and retest that high bound of the S&P 500 before what I think would ultimately be then a new sell-off in the markets.
Yeah, for people who want to know, why have all of these charts and everything, it's I would say, and maybe you can agree or expand on this, that it's good to have multiple indicators, because if you just look at one, it could be a descending triangle and be bearish, and if you don't look at another opportunity, you might not see the potential rebound. So when utilizing, software technology, algorithms, whether it's ToroAlerts or anything, stacking those tools on top of one another can give you a better idea for when events like the FOMC have their meetings, and that's going to move the markets. You're going to know one way or another what's going to happen, to have a better idea the more tools and indicators you're using. Would you agree with that?
Yeah, I mean, no one indicator is ever going to give you a cheat code. They're all useful, but they are mostly useful in conjunction with multiple indicators, and different people have different trading styles. And so, I've got quite a few indicators that I kind of play around with. I've actually played around with many more than just the ones that I kind of use as a default. But you can definitely use too many indicators, I think, because then you kind of have paralysis by analysis. Mm-hmm. You also don't want to just rely on just one indicator as well. And so I've kind of found certain things that tend to work pretty well for my trading style. And the main thing is just don't just, like Elliott Wave as example, just because you see an Elliott Wave count that mathematically makes sense doesn't mean it's guaranteed to happen.
Have you adapted or changed any of your technical approach in light of FOMC meetings? We've got a huge federal open markets committee meeting where you're potentially going to raise rates again. What's the impact of that meeting, and what do you do to prep for it?
Well, what I've kind of learned, especially throughout this, because this is my first time I've been through a major rate hiking cycle with the Fed as a trader, and so experiencing that, I've kind of learned throughout this last market cycle how to kind of play that better. And I tend to not like to load up new positions or like right before the Fed meeting. Those are posted, we know when they're happening. So I don't like entering a bunch of new longs, say the week before the Fed meeting, even if I think the Fed meeting is not going to be bearish, and if I think it's going to be bullish, we can get wrong, right? Anybody can be wrong in this market. And so what I do just kind of as a safety precaution is I don't load the boat with a bunch of new long positions a week or two before, because then they might technically be set up really nicely, but that Fed decision could just kind of melt the whole thesis. And so depending on the setup, like with this one, I generally I've had quite a few positions that were in the green, and so I took a lot of profits because I'm not really sure the outcome of how the Fed commentary is going to impact markets. And then we also had a jobs report on Friday. So I took profits on a lot of winners, and kind of waiting to see how things shake out in the next few days. And if I see some bullish price action, as we're at a lot of key levels on a lot of the charts that I watch, if I see those things pop to the upside, then I'll re-enter a bunch of long trades. If I see it break down beyond certain levels that I'm watching, then I'll put some shorts on.
All right. Before we let you go, any other risks or rewards before tomorrow's FOMC meeting and raising rates? Anything you want to say about effects on that or how to play that?
Well, I kind of like I mentioned, I think it's a safe play to kind of not take too much risk around those levels, because I listen to a lot of smart financial people, and there's people that are making great arguments to the bull and bear side of this meeting. And so I think it's best to be kind of somewhat defensive into those things, because ultimately nobody really knows. And then just kind of react off of those announcements and watch price action closely. And that's really what I always watch, is price action as kind of the number one indicator, and then tie it in with other indicators that I use. A couple of the sectors that I really like for 2023 real quick, precious metals and bonds, I think are two of the best ones. I've got the TLT chart up here. We've had a nice move off the bottom when we bottomed out around 92 on TLT. So I've been trading this one to the upside. I'm actually out of TLT at the moment. Obviously, depending on what the Fed does tomorrow, that could impact the bond rates. And so if I were kind of sitting in this bull pennant right now, so if I see that break to the upside, I'll be re-entering some bond trades. And I think for most of 2023, bonds are actually going to be set up for one of the best sectors to trade. Love precious metals in 2023. And then early in the year, if we do continue to see a rally in markets, I think just about everything potentially might work. I think we might see crypto pop a bit. We could see tech have a rally. and then sectors that did well last year, like industrials, base metals, could continue to do really well. Generally when we get these rallies, a lot of the sectors, tend to perform pretty nicely, but across the whole year, I think we need to be cautious, especially as we get later into the year, as I think there's still a high probability that we see a pretty tough recession and probably see most of the market get beat up pretty aggressively. I'll close off with just one more chart, taking a look at the yield curves. So the yield curves that I look at are the 10-year minus 2-year, and we got the 10-year minus 3-month. And so these are what the Fed likes to look at as well. And historically, when we see it drop below zero, that's been a really reliable signal that a recession's coming. Well, when I've zoomed out on these charts and gone back as far as these charts go, we are at the most inverse or negative readings on these charts in history. We're sitting at negative 0.7% on the 10 minus 2s and over negative 1% on the 10-year minus 3-month. And so if anything below zero is a warning of a recession, that's, to me, when you're talking about historically negative levels on this chart, to me, I think that's a real strong warning that there's potentially a pretty bad downside coming in the future. But it may not happen for 36 months.
Yeah, anytime something doesn't happen for a really long time, it's something to be looking at. So if people want some more information, they can find ToroAlerts at ToroAlerts. Obviously, you can download the app at ToroAlerts, and Jason Lammers on LinkedIn posting for ToroAlerts all over the place. So you can find us online at ToroAlerts.com as well. But I think with that, we got to wrap this one up. So I want to thank Jason Lammers, Chief Technical Analyst. Appreciate you running through all of this with us.
Yeah, thanks for having me on, Josh.
Likewise, man. All right, I'm out of here. Josh Kincaid. If you guys want more information, check out ToroAlerts.com. But with that, we're out of here. Invest wisely and trade safely.